Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude oil futures. Crude oil was down today, although it was down quite a bit more in the morning. We got a little bit of a bid back, and actually it looks like a pretty good technical run to the upside, even though we finished lower. We were down over 2%. And then the one-day delayed EIA data came out with a surprise crude oil draw. Now, it wasn't the fact that we got a draw that was a surprise, it was the size of the draw. 2.8 million barrels. Market was expecting only 400,000 of a draw in crude oil, and the particular size of it helped to contribute to the bid we saw in toward the end of the day. Again, we saw some disappointing news on the OPEC report about demand figures. They increased their demand, but not as much as was expected. But that draw still, nonetheless, pushed crude oil higher. So why did we end up finishing down on the day? Well, we got a gasoline build. That gasoline build also was not a surprise, but it was the size of the build that was a surprise. The build in gasoline stockpiles was double what the market expected. So being a much larger than expected build, you would think that the refineries would be expecting less. Now, crude oil stockpiles are at the high of the average range. Refined product, though, however, isn't. And we saw more improvement from the refinery runs. Now, refinery runs, again, measure the percentage of the capacity utilization of the refineries. We saw a huge drop from 95% down into the 77% range when we had the two hurricanes hit. Obviously, especially Harvey was much more devastating going through the refinery corridor up in Houston. But we're seeing a consistent recovery of those refineries, 1.1% recovery on the refinery runs, 83.2% now, again, creeping up toward that low 90% level. Now, the build of gasoline is most likely because we have basically completed the summer driving season. However, refiners may want to replenish that stock and get those stockpiles up higher, closer to the average of where they were, higher for the seasonal average going into the winter, because it's going to take a while to get there with these lower refinery runs. So 83.2% on that, again, remains the most important part of the EIA data. This is Bob Iaccino talking crude oil on a day we're over 1.25% lower from the CME Group trading floor in Chicago.